Good morning. Thank you for attending this panel dedicated to IPOs in Europe. I'm Nicolas of the family moderating this panel. So I've been 7 years in the VC space in Europe, and 7 years ago, there weren't many IPOs around at the global level, actually. I remember in 2014, Mark Andreessen talking about all the reasons why most tech companies were delaying their IPO, the regulatory burden, the relative scarcity of investment banks willing to underwrite small early IPOs as they used to exist in the 1980s and 1990s. And then 2 years later, 2016, I was struck by an article in Fortune mentioning that there were more than $600 billion waiting for an exit piling up in Silicon Valley tech companies. So yet only 3 years later, that is last year, there was a series of high-profile IPOs, among them Uber and Pinterest, an attempt by WeWork, which collapsed, as you know. And this year, the pace has only been accelerating for reasons that are all too obvious. The world is awash with cheap money. Companies obviously prefer to go public now rather than after the entire economy might collapse because of the pandemic. And so in this context, here in Europe, we're hearing the same refrain over and over again. We need more IPOs in Europe. Some say we need one of the capital cities, whether Paris, London, Amsterdam, to emerge as the preferred place for European tech companies to go public. Others claim that we need a European NASDAQ to counterbalance the US supremacy on global capital markets. And so this conversation brings together a broad group of participants. So investors are in search of liquidity, founders are in search of more capital and the smashing PR that comes with going public, and policymakers think that we Europeans are not playing in the big league if we don't have more IPOs. So I've learned from my mentor in venture capital, Bill Janeway, that there's no such thing as entrepreneurship and venture capital without public markets. So it's a very important topic. And I'd like by asking a question to Clif Marriott of Goldman Sachs. So Clif, you're an investment banker. You're part of this diverse ecosystem that brings together bankers like you, analysts, investors, journalists, PR firms, regulators, and so on. So could you provide us an overview inside this diverse ecosystem in Europe? Where are IPOs happening? Who are all those people working at making them happen? Where does Europe stand when it comes to IPOs as compared to the US?
Thank you, Nicolas, and thanks a lot for allowing me to join your panel this morning. Very interesting topic. First thing I would say is I feel like your introduction was a little bit negative in terms of the IPO dynamics in Europe and the state, let's say the general state of European technology in Europe. I actually am on the complete other side of the planet from you on that front in terms of I've never been more excited about the state of European tech as it stands right now. We're just seeing just fantastic, first of all, the ground levels, company formation, really interesting things being, or challenges being addressed through new company formation. And then as you work up through the ecosystem in terms of growth stage companies and more late stage companies, just the quality of companies coming out of Europe, accessing the public markets, but also the private markets has never been as exciting. I look through the deck that I think Sifted put out over the last couple of days, which was a good data piece on the number of companies. In 2012, I believe it was, there were 20 unicorns as per their definition. And now there's over 200 unicorns in Europe. So that wall of 600 billion of capital that you have, that you talked about in Silicon Valley, there's an equivalent wall of, I don't know, at least 20 billion, because that would mean, at least 200 billion from Europe. If you say there's 200 unicorns at a billion each, some of those are already listed. But in any event, the number of opportunities for great companies to list in Europe is just phenomenal. And we see as you talked about the dynamics in the market, One of it is the wall of capital, which felt slightly negative. I think of that as a positive thing. There's lots of capital available for growth companies. The second thing is a general understanding by investors, or belief by investors, that technology companies are benefiting from a number of the kind of tailwinds that we're seeing in the market right now. Increased offline to offline movements, increased collaboration, or need for technology to aid in collaboration, like Zoom or whatever platform we're using right now to access this conference, et cetera, et cetera. And so those trends are accelerating, and a number of technology companies are kind of benefiting from that acceleration of those trends. And investors want access to growth, and technology companies generally, but growth companies more specifically, they provide that growth, and really that's what investors want to access. So that's a really positive thing. To give a couple of statistics, and we have this debate with people, with companies, on whether they would like to list in Europe or list in the US. And I'm not a proponent or a believer that we need one exchange in Europe to allow companies to go public. We've taken companies public. I know great companies public in the UK. If you think about someone like Avast or Just Eat, or if you talk about Netherlands, Adyen, Takeaway.com, which is now over a $20 billion company. You talk about Poland. We just did the largest technology IPO ever in Europe, which was the IPO of Allegro last month, which was $2.8 billion that was done on the Warsaw Stock Exchange. So if good companies want to go public, they have their choice of going in their home market for the most part, whether that be Paris, Berlin, Paris, Frankfurt, Warsaw, London, or they can access the US markets. And I really think if you're a good technology company, you have ample access to capital.
Thank you, Clif. Martin, let me turn over to you. So you're a partner at Index Ventures with a focus on the Nordics, if I'm not mistaken. But beyond that, you're part of a prominent firm that has a foothold on both sides of the Atlantic. So we'd like to hear the VC perspective here. So what do you tell your portfolio companies about whether or not they should try and go public, and where they should do their IPOs?
Yeah, thanks, Nicolas, and thanks for having me. First, I would say, I agree with the sentiment that Clif kind of echoed, around the excitement of what's happening. I think, if you look at the number of IPOs, it's a bit of a lagging indicators of the health of an ecosystem, because it takes 10 years at least for when things go really well to go from inception to IPO. So all it tells you is how good was the ecosystem 10 years ago, not how good it's been for the past 10 years. And I think that's why Clif's mention of the number of unicorns, I think is probably a better indicator, even though the term unicorn can be debated. But I think it gives directionally, it gives a good sense for where the European markets is going. In what we tell our companies, I think we've been investing in these businesses typically since the first round or the second round, so at least usually 8 years before the IPO. So we're not in it for a quick flip, clearly. So we're fairly long-term holders, even though at that point, once the IPO, there is a need for liquidity over the next 2-3 years. But clearly, our goal is not to kind of maximize the valuation necessarily at IPO and rush it early. We want companies to go public when they're ready to go public, which means you need a certain scale, you need some certain numbers of controls and of predictability of the business, and so that's our main that's the main criteria. But for us, I would say IPO is the ideal exit route typically, given the size of our fund. We just raised $2 billion before lockdown, so we really need businesses that are going to be worth north of 5, if not $10 billion now to really make an impact for the fund. And there are very few acquisitions of that scale, and so IPOs are the perfect avenue for for our companies.
And what about the place? So what's the advantage of listing in the US for a European company as opposed to listing on their home market?
Yeah, we again, I'm pretty aligned with Clif in a way that we prefer for our companies to list on their home market if that's where most of their business is. I think it's you want to be typically ideally the closest to your to your customers, to your employees. There's a large ecosystem around you. We don't really believe in kind of optimizing on the margin for listing locations, and as Clif mentioned, there have been incredible examples of successful IPOs in Europe. If you look at ADN, obviously is an exceptional company, but they listed in Amsterdam. I don't think anyone would argue that they don't suffer from a discount. If you look at the multiples, they don't suffer from lower quality of investors on their register. If you look at the names, so clearly it is possible. I think there's one category which where I think Europe needs to still break a glass ceiling, which is on pure software to some extent. It is true that if you are an enterprise software company and most of your business in the US, well, most likely it probably does make sense. But the reality is, like, at that stage, typically your headquarters may be in the US as well. So it's not as if it was a totally absurd thing to do to list in the US market. But I think there's a trend that you've mentioned as well, Nicolas, in your writings multiple times around continental champions, even in the software world. And I think that's going to be another trend that's coming, where we're going to see some very, very large European businesses focusing mostly on the Europe market. And I do believe these companies should be listing in Europe.
Thanks, Martin. Marianne, next question would be for you. So you're part of France Digitale, which is an organization formed by French VCs and entrepreneurs to lobby for the interests of the tech sector in France. And there have been moves recently by the French government to try and snatch the IPO market from London in the context of Brexit. So we'll have the minister interviewed by John Thornhill a bit later this morning, who will tell us more about that. But how do you view this discussion? What's the rationale here for trying to have more IPOs in Paris as opposed to London? Do you think that will happen?
Thank you, Nicolas. Well, you can just decide to make Euronext the next tech stock exchange. So tech IPOs happen thanks to a whole ecosystem. Clif mentioned companies strong enough to be listed, but you also need investment bankers, you also need analysts and PR firms. So what can government and the French government can do to help IPOs happen in France? Well, I see two things. First thing is that the French government can help the ecosystem by creating later stage of growth, later stage VCs, and creation of US growth funds. What I mean is that startups, when they want to reach Series D or Series E, they often turn to US investors. And that's the reason is that Europe lacks strong late stage tech VCs. And once they turn to US investors, they are often asked to create a US topco. And once they've done that, they are asked to list in the US, because the SEC and the IRS created such a lock-in control rules that they cannot list outside of the US. So what can we do if our goal is to have European companies listed in France? What can we do? Well, we need to have a strong VC late-stage funds. So I'm not asking Emmanuel Macron to put billions of euros into late-stage funds, but what can be done, and that's what the French government has been doing over the last 2 years, is to compel or ask institutional investors to fund as LPs VCs. And last September, the French government announced that French insurance companies would be investing 5 billion, which actually turned into 6 billion euros, into late-stage funds and French late-stage funds. And that's actually quite a good measure, because having funds just cuts off all the debate over European digital sovereignty or whether or not there should be a control over foreign investments. Well, if you have the money, then you do not need to ask yourself whether there should be control or not. Another thing that can do our government is the fact that is to work on why IPOs exist. And the reason why IPOs exist is because VCs need to exit and investors need liquidity. And by investors, I mean, of course, VCs, investment bankers, but also employees and early investors. And as regards to employee, they need IPOs to exit and cash in all their employee stock options that they received during the moment where they were employees. And we have in Europe such a fragmented options that if we had a unified stock option regime all over Europe, then we could have easily cash in. And that's what Index would be quite interested in with the whole not optional campaign, but that's actually one important things we have in Europe. Les BSPCE, so les bons de souscription, it's your employee stock regime, and let's work on having a unified stock option regime on that.
Thanks, Marianne. Yes, there have been quite a lot of progress, both in France and soon in Germany, regarding stock options. And obviously, IPOs will become all the more appealing when employees are convinced that they can cash out and make more money to compensate for their early efforts at building great products. So let me turn to Gorka Apraiz. So Gorka, you're with the European Commission in Brussels, and you're focused on making local capital markets more supportive for local entrepreneurial ventures. There's this thing called the Capital Markets Union, CMU. And so why, let me ask it like this. So why does it matter that European companies are listed in Europe rather than the US, in your view, and how the CMU Action Plan, how can it help tech and innovative companies being listed in Europe?
Yeah, well, thank you very much. Actually, thank you very much for leaving me to the end, because I've been hearing really positive things. So I'm happy that the general tone of the European IPO market is like this, because we really believe that there's a lot of potential in Europe, and that's what we fight for. It's true that in some cases, when you make a comparison to the US market, there are a lot of things, and of course we always benchmark to the US because it's the most developed capital market. But I think there's a lot of potential in Europe, and that's what we're trying to fight for with the CMU. So it's actually good that I came just after Marianne, because she mentioned a lot of things which we're actually working on. Unfortunately, the tax issues is something that from a European level we cannot tackle. I agree that a more harmonized approach on a tax level will help definitely to tackle many things, but unfortunately that's something that it's a more national level thing that we cannot tackle at this stage. But on the other things, I'm happy that Marianne mentioned a lot of things, and I'm also happy that Clif and Martin mentioned things that we're actually working on. So we recently, as you mentioned, we were working on the CMU Action Plan. That was launched in September, last September, so quite recent. And just to focus, because I'm not going to go through all the actions that are mentioned in the CMU Action Plan, but some of the actions that are related to what we're discussing here. So things like, for example, how do we actually intend to make more accessible capital to European companies, and especially to young, high growth, innovative companies like tech companies. So one of the things that we intend to improve is to make access to funding easier by, for example, simplifying the listing rules for public markets. One of the things that we've seen is that there is a high administrative burden. There is a high cost for listing. There's difficulty for many companies to comply with the listing rules, and that dissuades many companies from going public. So this, in a way, this limits the possibilities for these companies to actually go public, and this makes them more dependent still on bank financing, which is what we're seeing right now with the COVID context. So this has become, so everybody will agree in this discussion that the CMU and the capital markets development in Europe has become even more important with the COVID as a way to make recovery and growth more important right now. The other thing that we're working, and that's also related to one of the points that Marianne mentioned, is that we're working on creating a single access point for data, including not only financial information, but also sustainability related information. That's what we're going to be calling European Single Access Point, or ESAP. And the objective is to reduce the cost of information search, also to give the possibility for other investors, so widen the investor base for those companies that are lacking those institutional investors, like Marianne said. I totally agree that one of the main issues that we find right now is there's a lack of institutional investors going into small companies, and that's actually what we need. Of course, retail investors are important, but institutional investors can make the difference. Also, you've probably heard about this, and that's one of the actions that was mentioned by the President von der Leyen last year, which is the creation of an Sme Ipo Fund. So we also, and I fully agree that there's a need for a connection between late stage VC funds to those funds which are investing into primary markets, so IPOs. So that's something that we're working on. So we intend to create an Sme Ipo Fund in a way to make it easier for companies to raise capital in public markets. It's something that will take time, but we have acknowledged that there is a lot of potential, there is a lot of space, there's a funding gap that we can fill in through the creation of an Sme Ipo Fund. And we actually believe that this Sme Ipo Fund will come in the right time, especially post-COVID, because we see that there's an enormous funding gap on equity, and we need to reduce that dependence on bank financing, which otherwise makes the whole system just systemic. So, and also we're working among other actions just to complement, for example, on making institutional investors more interested into SME equity, and that is something that we've seen, especially institutional investors, including insurers, banks. So we think there's a lack of institutional investors going into SME equity, and that's something that we need to correct. And finally, let me just finalize by saying that this is something that it will take time. I mean, President von der Leyen mentioned that the CMU is a generational project. We think that the saying that Rome wasn't built in just one day, the CMU will take time. Integrating capital markets, it's something that is not easy. It will take many years, because mainly we find that there is a lot of barriers to the single market, which in most instances are linked to culture, they're linked to historical or customs, etc. And we think it will take time, but I think we're on the right track. So thank you very much for leaving me to the end, because I think it came all in the right place.
Thank you. So hopefully progress will be made until this wall of capital that Clif was mentioning is ready to turn into liquidity. Can I ask maybe one last quick question, especially to Martin and maybe Clif as well? Is there, while we're waiting for more IPOs to become possible in Europe, is there an alternative? We've seen more private equity firms getting interested in late-stage tech companies like Silver Lake or KKR. Should we rely on those while the European IPO market is shaping up?
Yeah, I mean, they're definitely not mutually exclusive. I mean, we need to have as many options as possible. You know, not every company is an Adian. You know, every company has a different profile. Obviously, you know, I think you know, if you are extremely fast growing and on a massive market and you can go public, and that's the desire of your investor base, I mean, that's the best option in many cases, but there are many different situations in between. And so definitely later stage PE, which are already to your point, being a lot more active as growth stage investors, even from Series D onward. There have been multiple cases over the summer, for example, of very large checks being written by more PE type funds, in France, including in France, and then there's obviously the SPAC question, which I think is one of the things that you probably had in mind, which hasn't crossed the Atlantic yet, and where again I think it is a bit of an illustration of how Europe is still a little bit behind in some ways, where it's a phenomenon that seems to be already kind of slowing down in the US and hasn't even got started here in Europe. And whether it's it's a good or a bad thing is a bigger discussion. But at least what it shows is that European markets are a little bit behind on innovation and on trying new things and letting whether it's institutional or retail investors. I think it's something we haven't really mentioned a lot of, which is a big phenomenon in the US. We are investors in Robinhood, and that's deeply transformed the way Americans and stock ownership by individual Americans is multiple times higher than in Europe. And I think my hope would be that Europeans become a little bit more capitalist, and that they realize that's where growth is going to come from for their wealth as well, and not only in kind of life insurance. So that's my final word.
Thanks. So it's time to wrap up. I think we've heard great perspectives here, quite an optimistic view as to more IPOs on the way, a thriving European tech scene, hunger for liquidity from everyone's part, a more favorable regime when it comes to stock options. So I really hope we can catch up when it comes to innovation. There are still marginal effects like in enterprise software, as you mentioned, Martin, or that lockup effect that once you have a top co in the US, you cannot come back to Europe for being listed. But eventually, it will all be solved over time.